Hello traders, this is Rich from Tradesight. This is our market preview for the upcoming session. This is going to be for Tuesday, August 27th, 2013. Well, today kind of spent a day where they were trying to flex their muscles in the market, had the Monday morning inflows, but the market internals were not good really throughout the day. And one thing I'm going to start doing is I'm going to start grading the market. That's going to be starting in September. So what we're going to do is we're going to grade the price action, we're going to grade the internals, and also grade the intermarkets. The intermarkets are how the market plays out with its competing asset classes like the currency markets, the oil market, the gold market. So we're gonna boil that all down. That's gonna be fun. That's coming in September. But today's just a little preview of that, and what I noticed today was that the price action was okay, and I would give the price action, kind of a C plus, B minus early in the day because it was bifurcated, meaning one side was stronger than the other, but the market internals were awful all day. We were at like D plus, C minus range for a grade for the market internals, and when you've got the VIX up on the day, even though stock prices are higher on the day, that's when oftentimes you get that late day break. And today we certainly had news coming out with the Secretary of State speaking, but the market internals were not good all day. So it was almost like the market was kind of setting itself up for this sell-off this afternoon. So we did get a sell-off. The market internals were not good, but we'll take a look at those in depth one by one just a little bit. But first, let's start and take a look at the major futures, and let's start with the ES futures here. Alright, so here's a look at today's ES futures. You can see that we gapped up on the day. We did try and take a run at this gap window. The gap window is coming in at about 1668 or so. Couldn't get up and above that. Ultimately, we kind of buckled down here and closed right at the 50 DMA. So definitely potential negative day because we did close well below the open and did not hold the gap. But we're still just kind of being drawn for now into this 50 DMA. And I think with the low volume environment that we've had so far this week and the week before that, with the end of the summer at hand here, we're just really feeling the kind of an exaggerated effect from that 50 DMA is really pulling on price. That 50 DMA is also coincident with that 6/8 level on the Murray Math box. So just kind of hanging here without too much to show for it. We do have this breakaway downside gap that's still in effect. We tried that, so tomorrow could be an important day. If we do get range expansion to the downside, that would be a failure at the gap window, and then a loss of the 50 DMA perhaps. We'll have to be on guard for that. So near-term levels overhead is obviously going to be the gap window here that we talked about at 1668 to the downside. Today's settlement is very important, which is essentially the 50 DMA. Next level is going to come in at this area right here, just above the 5/8 level, where we have a close and an open, kind of right in that area. Here's a look at the NQ futures. The NQs still have a active 13 secret exhaustion in them. We're still kind of just hovering in the area of this 8/8 level. We have kind of a gravestone doji here where we opened up on the day just a little bit, tried to press higher, got rejected, closed lower on the day and also below the day's open. So that's kind of a gravestone doji with just a little bit of a tail below it. The classic gravestone will close on the exact low of the day, but this is pretty close. So key levels to watch for tomorrow are going to be the old high, which has been in play a couple of times here, 31.46, 31.47. To the downside, this gap window right here, which is the low of Friday's candle, at about 31.10 is going to be in play, and then obviously the gap fill is going to come in next, and that's going to be coincident with the 10 EMA. Below that, the 7/8 level at 3,085 is going to be important. MACD is still pointing to the downside in the NQs, same condition in the ES. I just didn't want to take up time talking about both of them, so keep that in mind here. Crawling up here, but still in a negative condition until we get that cross. All right, guys. There we go. Internally, the market had kind of a tough day. was fairly sloppy from the get-go. Here's a look at the cumulative advanced declines. The this lateral line here in the New York side is still in play. We've got a double top in place, potentially rolling down. It's really the lateral trading range for now, meaning the market's not making any net gains internally for now. But this is definitely not a positive day for this reading. If we do break down below this low and breach this line, that's definitely going to be a real negative for the market if we start to break down below this little channel that we've been in. But right now we're right in this lateral trading range for now. The Nasdaq side, that's the overall NDX, is still below this trend channel it's fallen out of. Today we curled down. We did not make a new low on the move, but if we do make a new low on the move, that'd be very, very unwelcome, and basically disqualify this lower high that we have in place right now. The 10-day trend made a little bit of a bump up on the negative market internals, but is absolutely nowhere near terminally exhausted here at the 1.35 level. So if the market wanted to either turn down or turn up, it's got plenty of room before it gets to either one of the thresholds for reversal warning here. All right, one of the other internal metrics we want to look at is the S&P divided by the TLT. Right now we're kind of getting down to the lower fringe of this very important trading area. As long as we're riding in this trend, traders are putting risk on here in the longer term perspective. When we break down below this, that's the risk off posture. We're actually getting pretty close to breaking down below this trend line out of this channel and getting to a risk off posture. Not there yet, kind of a little one-day effect here, but if we do bust through that, that's definitely going to be notable, and something that we're going to want to take action on by taking a more aggressively short posture in the overall market. The other important chart is going to be the Dow Gold ratio. The Dow Gold ratio has aggressively broken down below this very positively sloped regression channel. When this ratio is on the rise and we're making progress along this regression channel, folks are putting on risk in the form of acquiring shares represented by the Dow 30. When this ratio is on decline, that means that the Dow 30 is the industrials that are being shunned in favor of gold. So gold's on the rise right now, and people are taking a little bit more of a defensive posture here. This is definitely something to be aware of. And don't pass on breakouts or continuations in the gold futures themselves or the gold type equities. All right, and here's a look at the sectors ranked from best to worst. The best on the day was obviously the BTK. There was a takeover. Amgen finally announced the takeover of Onyx, so that lifted both of those, and certainly there was a lot going on there. But I think we take the BTK here out of the equation. I think what we're going to see is that the rest of the action was fairly defensive. Top gun on the day after the BTK was the XAU. The housing sector was kind of hanging in there pretty well, but the more defensive and definitely the interest rate sensitive stuff was fairly weak on the day. The BKX was near the bottom of the barrel. The utilities were weak, airlines, the consumers were weak, pharmaceuticals, which is also to a degree somewhat interest rate dependent, was or yield dependent, was fairly weak on the day. So kind of just in the very beginning of kind of a risk off type of a posturing today. Keep in mind that I want to mention the counts here. Keep an eye on the counts. The commodity related equities are in a 13 condition. Internet stocks are at 12 days up in both the Secret and the Comer, which is notable. So the Google, Yahoo's, things like that could easily start to see some rollover after we record 13 up in that sector. So kind of definitely on guard here for a little bit of a rollover. It's still a little bit early. September is generally a negative month, but we haven't started September yet. We'll have to see. August has been very, very light in volume, and it wouldn't take much selling to really get things rolling to the downside if that's what the market wants to do. And if they do that, we'll definitely not be passing on setups on the short side. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.